Today in this video, we're going to talk about why, if the interest rates come down, that the real estate prices will not come down. Check it out. Hi, I'm Rhonda Burgess. I'm a real estate broker and mortgage underwriter here in the Nashville, Tennessee area. And my firm is Southern Living Realty Partners. All right. Let me touch this right quick. And I'm going to tell y'all where this came from. Yesterday, my son came home and he had been to see one of his good friends. They've been friends since probably middle school, for forever. Nice young man. He lives now about an hour from us, going to the southeast from here. So he said, I went up, I went and seen my friend and everything because his friend had a gift for him for his birthday because my son's birthday was September the 11th. So I said, oh, they still living with his girlfriend's parents? He said, yeah. And I said, I thought you said they was buying a house. Yeah, they had tried, but that house ended up having a lot of termites and termite damage. And so that deal didn't go through. I said, oh, okay. And then he was like, yeah, they're going to wait until the market crashes and the interest rates come down. And then they're going to try again. They thinking that should happen in the next year or two. I said, oh, okay. Hey, my son is 32 now, and they're all about that same age. And so I know it's a lot of millennials thinking that way. It's a lot of people my age thinking that way. It's a lot of people just in general thinking that, one, we're going to have a market crash, and two, that these interest rates are going to come down significantly, and then everybody will be able to buy. That's not going to happen. I've said this before. My market here in the Middle Tennessee area is still just as strong. It's a little bit more even. We were in a serious seller's market for the past 2-3 years, since probably about 1920. We've been in a serious seller's market, meaning multiple offers on every house, offers over list price, and a whole bunch of cash offers. Even when, we had a bunch of institutional buyers like your Zillow, your Open Door, out here buying. They're out of the market now, really not buying as many. But yeah, I saw another Open Door. I had an Open Door closing last week. So they're still here. Zillow's not in the market, but Open Door is still out here. So you got your institutional buyers still buying. But one thing you need to understand is the cash buyers have not gone away. Cash is king. Okay? Cash is king. You come in here. Okay, let me have my house listed for $550,000. And you come in and I get 2 offers. And I get a cash offer for maybe, let's say, $525,000. And I got an offer where you're getting down payment assistance and closing cost assistance, and you have only 3% in the transaction. And I got to wait 45 days for you to close. Which one, as the seller, do you think I'm going to take? Okay. I saw something the other day, and it really hit home with me because coming down the road to turn onto my street, road in my subdivision, this house has gone up for sale in the past week or so. Okay, and so I'm in my neighborhood Facebook group Friday, like 2 days ago. And I'm just going through, seeing what's going on. We have a bunch of people posting about lost dogs and cats and different stuff going on. And there was a community yard sale this past weekend and everything. Okay, so cool. So I see that same house that's up for sale. It's less than a quarter. It's like two blocks from me. Okay. And they said, yeah, we put our house up for sale. If you know anybody, blah, 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 we're being relocated. We're relocating for work. But we love the house, but we got to go. Okay. And so they've listed this house for $550,000. Okay. All right. Cause it's a little bit smaller than mine. So I'm like, okay. Because, I did a video, I guess it's been some months ago now, where but the houses right here in my immediate area, for my size house for a 5-bedroom, it's like $625 is the going rate. Cause I seen them selling like that high. And I was like, I told y'all I wouldn't pay $625, but hey, that's that's cool. So I say this, that even if, let's say my house is worth $550, that house, 2 blocks from me, let's say it sells for $550. It's a little bit smaller, but I'll take $550. Okay, cool. That would give me over $300,000 in equity from what I owe on my house. That would give me over $300,000 in equity. Okay. So let's say, and I'm one of these sellers who locked in a super duper 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 low rate when everybody was refinancing. I think I'm at 2.5% interest rate. Okay. That's where I'm at. Or 2.75 or 2.25, something. I don't know. I'm in the twos. Okay. I'm in the 2% interest rate. So as a seller, me, if I'm looking at buying another house, I'm like, I ain't finna trade in my 2.25, my 2.5 for a 7. I'm not finna do that, right? So I'm not putting my house on the market. I'm sitting here. Remember, I said those people said they have to sell because they're being relocated for work. Okay, but believe me when I tell you, the majority of us people that own real estate that bought years ago, the only way we're selling and buying at this higher interest rate is because we have to. Because those of us who we ain't got no rush to be nowhere, we ain't got no real incentive to sell, we sitting on the sideline. We just watching our equity go up like this every month, equity going up. Okay. All right. So let's talk about it. Now, let's say the rates. So I don't want to give up my 2% something rate, right? Okay. So let's say this time next year, let's say it's next September, okay, of 24. And the feds have started reducing rates. Okay. Let's say rates have been being reduced. And now I can get maybe a 4% rate. Let's just use a 4. I can get a 4% rate. And really, because I have enough equity, I got $300,000 worth of equity, right? So I could really buy that rate down. I could spend the money and buy that rate down and get a 3 or something like that, okay? Because the interest rate done come down to maybe a 4 or 5. I could buy it on down some more because I got the cash to do it. Because I got nothing but equity, because of these prices have shot up so much, right? So I will be in a position where I can move up in house if I wanted to, move up, move down, whatever, because I will have the equity to do it. At the same time, if interest rates come down in that 4-5 range, whatever, that's going to bring a lot of buyers back into the market. That's going to bring people who cannot qualify at 7 or 7.5 or 8%, but you can qualify at 4, 4.5, 5%. It's going to be so many people rushing back into the market. And what is that going to do? So when I put my house up for sale at that $550 a year from now, there's a lot more buyers. So you know what? I may not have to take that $550. I may could get $600. I may could get $625. I may could get $650. Because when the rates come down, more people can qualify. So you've got more buyers. And we're still going to be having a shortage of available homes. They can't build them fast enough. They're going to have a shortage. So, shoot, if I wait this time next year and the interest rates are down, I may have $450,000 in equity instead of $350. So what's my incentive to bring my price down? Because the interest rate come down. Because when the interest rate come down and all these buyers come up, shoot, I'm gonna raise my price. I'm gonna raise my price. Listen, it's just simple supply and demand. When the interest rates are gonna come down, there are gonna be more buyers in the market, and the prices are going up. The prices will not be coming down. I don't get where this crash is coming in at. It's just not happening. There's no reason for it to. You know, when we had the whole market crash in 08, 09, it was because we had more houses, people being just walking away from the house, and people being foreclosed. We had more foreclosures than we had buyers. Because see, once you get foreclosed on, it's not like you could buy another house. Your credit was shot for some years, you know. And we were, and those of us my age, we were having babies, you know, and we had babies. And so now all those babies is grown up, and they're like 30, 32, 25, you know, they're of buying age now. So you got a whole nother pool of buyers. Plus now, my age group, we in that sandwich group, because we still taking care of grown children, or we helping grown children. Plus our parents have aged, so now we got to sell their house and move them in, or we're looking to buy a big property, a big enough house or bigger enough property for everybody, because we caught in the middle of these two generations. You see what I'm saying? Because we taking care of our parents, and we still got these, you know, these grown children. Okay, so again, like, I'm gonna give you an example. If my mother said she did not want to live by herself anymore, we would sell my mother's house and move her in with us, period. Now my mother, she's my biggest cheerleader. That's my ace boom coon. That's my chick on the side. Y'all just don't, ain't nobody, ain't no woman like my mama. You know what I'm saying? And I know everybody feel that way about their own mother, but let me just say this. We would sell her house, and we would sell it for a pretty penny. My mama's still in Nashville. She get calls, text messages every day. Do you want to sell your house? Do you want to sell your house? Do you want to sell your house? So we would have no problem selling my mama's house for a pretty penny. And let these interest rates come down. We would sell it for even more. This is what I want y'all to understand. And then, you know what we would do? We would take her equity, and we would sell our house, and we would not sell it for cheap. What is the point when I got more buyers than a little bit? Okay. So then we would take our equity, and we would combine that and go buy a house or a property suitable for all of us, for multi-generational living. Okay. And you can best to believe that when we go buy this $2.5 million house, they have went up on their price too. This is not, listen, when the interest rates, we got a pause right now. They didn't increase rates last week. Okay. The Feds did not increase rates last week. They leaving it open to whether or not they want to increase rates for one more time before the end of this year. Okay. That's cool. That's them. Okay. But let's say they keep rates the same and they don't do any more rate increases. And then next year we actually have rates come down. What I need for y'all to understand is when them rates come down, the price is going to go up. The price is going to go up. The competition is not going to be less. The competition will not be less. Those of us homeowners like me and my husband and my mama and everybody, and we sitting on all this tons of equity, we're still going to beat out first time buyers. We're still, the first time buyers are still going to get run over, more than likely. We're still going to beat y'all out because we have the equity. 9 times out of 10, we have better credit, because at this point in our life, you know, we've gone through, raising kids and all this and all that, and we've had time to repair our credit if we jacked it up, you know, like I've talked about before and everything. But so we've got time and money on our side. So just know that everybody waiting on this crash to happen, and when interest rates come down, you're going to be able to buy. I don't see it. I think the prices will be even higher if and when the interest rates start to come down. Again, my name is Rhonda. Burgess, and I am a real estate broker here in the Nashville, Tennessee area. If you need help with buying or selling a home in the Nashville area, please give us a call. We'd be happy to help you. There's a link down below for you to schedule a consult if you would like to talk about buying or selling real estate in the Middle Tennessee area. Thank you, and as always, have a blessed day.